What's up guys? So today's video is about the Ultra FICO. If you haven't heard about Ultra FICO, FICO has decided to change the way that they score your credit. So FICO is the biggest credit score company in the US, and it's a way that a lot of banks decide on loans. And so this is super important for you to know. The two new things that are changing is one is that FICO is now going to look at your bank accounts and also your banking activity. So in the past, if you had $5,000 in your bank account and you wanted to get a loan for $2,500 because you had terrible credit and you want to help build your credit, you wouldn't be able to get that loan for $2,500 because your credit was so bad, or you would have a super high interest rate. Now with this new rule, you can tell the bank like, hey, I have the $5,000 in my bank account. I just want to do this to build my credit, and so it's a better opportunity for you. And so this is specifically best for people who've never had credit before, or that are young, and have low credit, or people who just need to rebuild their credit, but they've gotten better at managing their money and that they're able to save now, and now they want to work on building their credit. So it's actually a really great thing, and that's why I want to talk to you about the benefits. So let's go.
Knock, knock, let the devil in, malevolent as I've ever been, head is spinning, this medicine scream.
So if you don't know really what a credit score is, basically a credit score is a range that goes from 350 to 850, and it allows lenders to find out how risky you are. So what that means is if I'm gonna lend money to somebody, if they've paid their bills on time, if they've had like accounts for a long time, I'm gonna trust that person a little bit more. I'm talking about like as the bank, or if I'm a lender, I'm most likely gonna trust that person more based on their credit score. If you don't pay your bills on time, or you haven't had a credit score, those are things that make you look more risky, and that's probably why you won't be able to get the best interest rate that you want. Ideally, you wanna be in about the 700 range, or bare minimum is 650. If you're not there, you might wanna look at finding ways to build your credit. Getting short-term loans and paying them off, getting a credit card and just using it for gas, and making sure that you pay on time. The biggest thing is making sure that you're making payments on time. Credit card companies love that, and it's a great way to boost your credit. This is gonna go in effect for next year, and this is huge for somebody who's gonna be buying a house or buying a car in the near future. This can add up to 20 points for millions of people, and for a lot of people, it's very difficult to get their credit score up, but this can make a huge difference for a ton of people, especially young people, like I said before. And so this is why it's important for us to take a full advantage of this. And this is voluntarily. This isn't gonna be happening for everybody. So the way that this is gonna happen is you're gonna go into the bank and you're gonna try to get a loan, and if you're not happy with the interest rate or maybe how the bank has scored you, this gives you the opportunity to be like, hey, check out my bank account, I have the money in there, and then maybe get a better interest rate. And so this is gonna help a lot of people, especially people who are starting out. Because this is going into effect next year, there's 4 things that you can do. One is to try to have $400 in your account as the average balance. That's gonna be really important that you do that, having that bare minimum of $400. I know we've talked about how to save $1,000, so that's even better, but the bare minimum is to have $400 in your account. Another thing is to not overdraft your account. That's a big thing that you don't wanna do. You don't wanna overdraft your account because that's gonna go against you negatively. Having a negative balance is gonna be a bad thing. That's also gonna go and negatively affect you. And then also the length of how long you've had your bank account. So if you're a person who switches a lot of bank accounts, make sure that you have an account that you use. Even if you use it just irregularly, it's important to have an account based on the length of the credit. Another thing that can help you is making sure that you're paying your bills on time, and you can use that through your checking account, so then there's more activity. Basically, the banks want to just make sure that you're going to be paying back the loan. They want to minimize the risk as much as possible. So having the money in your bank account really helps that out, as well as paying your bills on time and being responsible. All right, guys, that's it. I hope this helped you out. This is super important that you make sure to take the steps to get your credit score right. And I just want to mention one last thing is to check your credit score using the link below. That's the one that the US government recommends. It's annualcreditreport.com. But thanks again for watching, and I'll catch you guys in the next one.
Ready to snap, any momentum, taking his time, go get 'em. They ain't gonna know what hit 'em. When they get beat with the